Today, we're going to be talking about Tesla, Apple, the upcoming split. We're going to be taking a look in the past and seeing how the stock Apple has reacted to stock splits in the past when it comes to the day of, the short term, and the long term. By the end of this video, you'll have all the information that you need to decide whether you're in or you're out. A stock split in theory should not affect the price of a stock, but the markets are clearly telling us otherwise. Since July 31st, Tesla has risen 47%, while Apple, on the other hand, since July 31st, has risen 31%. This is all according to the market close of August 21st. So think of a stock split as such. You could have 4 quarters, you could have 10 dimes, you could have 20 nickels. At the end of the day, you still have just $1. There's speculation that due to more retail investing, this is why we're seeing the reaction that we're seeing from the news of the stock split. And by different, I mean, it kind of feels like Tesla's going parabolic. And I'm kind of kicking myself when I saw it at 180 and didn't buy. And I'm also feeling bad that when it was $800-ish, I believe, back in January, I just kept on telling my friend, don't chase it, don't chase it. That was probably not the best advice. So in the past, a stock split has been more of a psychological thing in terms of approachability. For example, Amazon at over $3,000 isn't quite approachable for most investors. But recently we have seen the introduction of fractional stocks, so people can buy a portion of a stock. Even though most exchanges or brokerages have this feature, not all do. And some are specific for just particular stocks. So even though the fractional stock buying is available, it's not necessarily available across the board. So I talked about retail investors entering the market, and that's why many people believe that we're seeing such an intense reaction from the news of stock splits, which makes me think, I should absolutely be keeping an eye on some potential stocks that might be announcing a split in the future. Hopefully, maybe Amazon. So back to retail investing. Robinhood reported that in Q1 of 2020, they had 3.1 million new users. But how does that compare to the overall number? They have approximately 10 million users. So it's unbelievable to see that 31% of that actually came in Q1 of 2020. This is good news because people are just getting excited and they're more interested in learning about stocks, investing their own money, and actually handpicking stocks. Obviously that can be more risky, but I think that everyone needs to try it at some point because it's a great learning experience. What's interesting is that you might think across the board all brokerages saw a massive increase in Q1 of 2020, but that is not the case. TD Ameritrade and Charles Schwab reported that they only saw a 600,000 increase of users during that same period of time. Maybe it's because Robinhood gives you 1 free stock when you join. Go ahead and check out the link down below. You can get 1 free stock on Robinhood and 2 free stocks on Webull after you deposit $100. And I said deposit, I didn't say spend. So you get your first free stock, you deposit $100, and then you get a second stock that could be valued all the way up to $1,400. Back in July, Robinhood reported the 10 most popular stocks. Both Tesla and Apple made it into the top 5. Apple coming in at 5th and Tesla coming in at numero uno. So here's how a split works. The company comes out and announces, hey, we're having a stock split. It's going to be on this day, and this is going to be the ratio. So Apple announced their 4-to-1 stock split on July 30th, while Tesla announced their stock split on August 11th at a 4-to-1 ratio. Even though both of these stocks are going to be split on the same day, and they're also going to start trading after being split on the same day. So this is the first time Tesla has ever done a stock split, versus on the other hand, this is the 5th time Apple has done a stock split. Apple's first stock split was actually in 1987, a 2-to-1 ratio. Then again, they had a stock split in the year 2000, another 2-to-1 ratio. Then again in 2005 with a 2-to-1 ratio, and in 2014 with a 7-to-1 ratio. Here's what's interesting. If you held just one single Apple stock before all of these splits, after the 5th split, you would have 224 shares of Apple. If Apple maintains its price at $500 at the time of the split, that would give you a total of $28,000 of Apple. And what's also really interesting is that if Apple had never done a stock split and they had the same market cap, just one stock of Apple would be worth $28,000. So let's see how these stocks have performed this year. Year to date, Tesla is up 402%. Not too bad. Apple year to date is up 71%. Well, how about over the last year? Over the last year, Tesla is up 893%, while Apple is up 138%. Let's take a look at market cap. The current market cap of Apple is 2.13 trillion. The market cap of Tesla is 382 billion. I'm going to go and give you 3 examples of other car companies and what their total market cap is. See, you can't necessarily look at the price of the stock. That doesn't tell you the story. It's the market cap that tells you the story. So Toyota's market cap is 23.1 trillion. Wow. Ford market cap is 26 billion, and the GM market cap is 4.8 billion. Does history tell us that a stock split is positive overall? Let's go ahead and talk about short-term versus long-term. Let's take a deeper dive into Apple's stock and how it responded to the former stock splits over the years. So let's start out by looking to see if the day of the stock split was a red or green candle. So Apple's 4 previous stock splits were all green days except the one on June 21st of the year 2000. And if you remember, the year 2000 was the dot-com bubble, and a lot of things hit the fan, if you know what I mean. So this isn't surprising. You're gonna see that overall the numbers look quite good except during the year 2000. So let's go ahead and look at the 30 days prior to the actual stock split. So we're gonna see the percentage gain starting 30 days prior to the split all the way up into the split. In 1987, the stock rose 7%. In 2000, 31%. In 2005, 25%. And in 2004, 15%. Now we're going to be looking at the first week after the split. So the first 7 days after the stock split. In 1987, the stock rose 13% that week. In the year 2000, it dropped 14%. In the year 2005, it dropped 6%. And in the year 2014, it dropped 0.5%. So the short term didn't look too good. So what is that telling us? That is telling us that that is a potential buy opportunity, that we could potentially see a pullback the first week after the stock splits. But let's go ahead and look to see the first month after the stock split. In 87, the first month, Apple rose 19%. In the year 2000, it rose 15%. In 2005, it rose 2.2%. In 2014, it rose 4.5%. How about the first year? How did the stock do the first year after the split? In 1987, it rose 21%. In the year 2000, it declined 52%, which is significant. And like I mentioned, it was the bubble, the tech bubble, the dot-com bubble of the year 2000, and that's why. That clearly reflects that. In the year 2005, after the first year, it rose 64%, and in 2014, it rose 39%. So the short term, within that first week, might give you a buying opportunity. But if you hold for the whole next year, there could absolutely be potential there. So I have heard people saying that if you have a fraction of a share of Apple or Tesla, that you will not be granted the stock split. That is not the case. This came directly from the Robinhood website. Note, typically, when a stock split results in fractional shares on Robinhood, you receive the cash equivalent of any fractional non-whole share amount. For this particular split, however, fractional shares will be supported. So what's gonna happen is that on August 28th, Friday, August 28th, once the market closes, you will be granted the shares, the additional shares for both Tesla and Apple. Those shares will start trading on Monday, August 31st. So full disclosure, I've been waiting for a Tesla pullback for way too long. Once it hit the 500 mark, I was like, you know what, I've seen this before. This feels like a Bitcoin situation. I'm gonna wait to buy. And I kind of encouraged my friend to just not chase. I said, you know what, just never chase. Every time I chase, I regret it. Well, this time I didn't chase and I regret it. So sometimes you should consider chasing. But this is how I'm thinking about Tesla moving forward. What's the big picture when it comes to Tesla? So I have 0 Tesla stocks right now. I only have 2 Apple stocks that I just purchased last week, but actually, I think last time I checked, they were up like $120, just 2 stocks, so that was pretty awesome. But here is some potential bullish news moving forward for Tesla. Tesla could be added to the S&P 500. That is always a possibility. The delivery of Cybertrucks. Some people think that, you know, the Cybertrucks aren't going to come to fruition, that they're not possible. Once Cybertrucks hit the road, I think it's going to be an undeniable truck that all people want. I mean, just the bed alone is a huge seller. Like the ramp that came down and they drove the 4-wheeler up into the bed of the truck. That was like a huge selling point alone. I just remember when I had my food truck business and I would need to load freezers in the bed of the truck and I had to use a lift gate, and oh my gosh, that ramp would have been way easier. Tesla is so much more than just a car company. Just like Amazon was so much more than a book company. There is no doubt that Tesla will completely change the way that we think about cars forever. Elon Musk has said that they're on track to make fully autonomous vehicles by the end of the year. That is what we must keep an eye on. How will that change the game? Imagine this, the average person uses their car maybe 5% of the time when you think of all hours out of the day. Imagine if you could just park your car on the side of the road, log into an app and say, hey, I am not using my vehicle for the next 10 hours. And while you're sleeping, your car is out giving people autonomous rides, basically being used as a taxi, and in return, you get compensated for that. Having a fully autonomous vehicle that would create revenue when you're not using it would be a massive game changer and would totally swing the pendulum when it comes to people deciding what vehicle they want to purchase. If you thought Uber and Lyft killed the taxi business, honestly, Tesla just might crush all of them. When I think about the comparison of Apple and Tesla from a psychological perspective, it kind of comes down to a status symbol. For most people, Apples are a status symbol, and it's kind of becoming the same way for Teslas. Even though these two things are status symbols, they are absolutely things and devices that add so much value to our life. They save us time. With an iPhone, they keep us connected. I mean, I have all Apple products. I could never imagine my life without them. It has become not just a status thing, but from a functionality perspective, it's amazing to hear the ultra wealthy that have a fleet of really expensive cars say that their Tesla is their favorite. If that doesn't tell you something, then I don't know what will. Do I think there's a big possibility the stock market will crash due to the times that we're in the pandemic? Absolutely. The likelihood is high, and things really aren't looking so good. We're going to see a lot of businesses not being able to return, unfortunately. There's stimulus money that people are waiting on, programs that are expiring. It's not really looking all that good. I don't know if Tesla or Apple will necessarily be overwhelmingly affected, but due to overall market sentiment, they could be. So what I'm saying is that, so to be transparent, I'm looking for red days. I'm looking for down days. I'm looking to add to my positions when they drop in price. And that's going to be my strategy moving forward, just dollar cost averaging in. I do believe that Tesla has the biggest probability of having more percentage gains in the long term compared to Apple. It really comes down to autonomous vehicles and how much of a game changer that's going to be for the entire vehicle industry. All right, so that ends my video. I'm gonna go try to convince my dad to buy a Tesla. He commutes like an hour and 15 minutes to work every day, and I've been trying to convince him to purchase a Tesla, but he's not about it. So after this video, I'm gonna send it to him and then continue convincing. So that's all I have for you today. Make sure you subscribe because I'm gonna be giving away a free Ledger Nano S when I hit 200 subscribers. Don't forget to get your free Bitcoin down below. And that's all I have for you today. As always, go out there and create a portfolio that you love.